Assalamualaikum everyone. My name is Nashira binti Muhammad Rusni. My group members are Nur Amila, Ayani Nabiha, Nur Ain and Nur Shazwani. Today we are going to present about sales and collection cycle.
For your information, there are 5 classes of transactions for sales and collection cycles. The first one is sales, cash receipts, sales returns and allowance, write-off of uncollectible accounts, and estimate of bad debt expense. For this presentation, we will present about sales and cash receipt transactions. Okay, let's look at the sales transactions. The first management accession is occurrence, where all the recorded sales are actually occurred and required. The audit objective is to identify whether all the reported sales are actually occurred and required. The class of transaction and relevant account are sales account, account receivable, cash discount taken, sales return and bad debt expense. For the internal control, the management need to make sure each sales transaction are supported by the necessary documents such as approved sales order, shipping documents, and invoice. The invoice need to be supported by the customer purchase order. As you can see, there are tests of control and substantive tests for audit procedure. For test of control, the auditor need to examine customer order for evidence of credit approval. Auditor also need to examine sales invoice for customer order and observe whether monthly statements are sent. Next is substantive test. The auditor need to review sales journal and master file for unusual transaction and amounts. Auditor also need to trace sales journal entries to supporting documents such as customer orders, sales order, and duplicate sales invoice. There are 4 audit evidence that can be used such as reconciliation of bank, relisting of cash, reconciliation of document, and cash received transaction. Misstatements also can be happen such as sales recorded more than once, sales included in the journals for which no shipments was made, and shipments made to non-existent customers and recorded as a sales.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ayani Nabiha. I will be presenting the next assertion, which is completeness. What is completeness? Completeness is all transactions and events that should have been recorded, and all related disclosure that should have been included in the financial statement have been included. What is the audit objective of the completeness is to check whether all sales are completely recorded in respective account. And next, for the class of transaction and relevant account, it includes sales account, account receivable, cash discount account, sales return and allowance, and bad debt expenses. Okay, for the internal control, what does the company do to make sure that the sales are recorded? First, shipping documents are pre-numbered and accounted weekly. Second, batch totals of quantities shipped are compared with quantities billed. Next is audit procedure. Audit procedure is divided by two, which is test of control and substantive test. For the test of control, the company will account for a sequence of shipping documents and examine a file batch of totals for initial of data control clerk. For the substantive test, which is the company will trace the shipping documents to the sales journal and to be sure that each one is included. Okay, next is audit evidence. Audit evidence include is pre-listing cash, bank reconciliation of documents, and cash receipts transaction. For the possible misstatement that company would do, which is sales and account receivable are under or overstated, and misstatement in related account receivable and related income statement account. Next, I will pass to Nur Amila.
I'm Nur Amila. I'm going to explain about the third assertion, which is accuracy. For accuracy, it means sales are correctly recorded. audit objective is to make sure whether the recorded sales are for the amount of goods shipped and are correctly billed and recorded. The class of transactions and relevant accounts consists of 5 types, which are sales, account receivables, cash discount taken, sales return and allowance, and bad debt expenses. Internal controls. There are 4 procedures in the internal control. Firstly, sales are supported by authorized shipping documents, approved customer orders. Next, batch totals of quantities shipped are compared with quantities billed. The third one is unit selling price are obtained from the price list master file of approved price. Lastly, statements are sent to customers each month. Audit procedures are divided into 2, which are test of control and substantive tests. For test of control, the first one is examine sales invoice for supporting documents. For the second one, examine file of batch totals for initials of data control clerk. The third one, examine the approved price list for accuracy and proper authorization. And the last one, observe whether monthly statements are sent. For substantive tests, firstly, trace entries in sales journal to sales invoice, then recompute price and extensions on sales invoice. Lastly, trace details on sales invoice to shipping documents, sales order, and customer order. For audit evidence, consists of bank reconciliations, pre-listing of cash, reconciliation of the document, cash receipt transaction. Possible misstatements that may be occurred are overstatement or understatement of sales and account receivables, uncollectible account receivable that have not been provided for, and overstatement or understatement of sales return and allowance and account receivables.
Assalamualaikum. My name is Nur Shazwani binti Yusof. I'm going to proceed with the next assertion, which is posting and summarization. Posting and summarization is sales transactions are included in the accounts receivable master file and are correctly summarized. The audit objective is to check whether all sales transactions are included in the accounts receivable master file and are correctly summarized. The relevant account involves are sales account and accounts receivable. So what does a company do? Company will send statement to customer each month. Next, computer automatically posts transaction to the accounts receivable master file and general ledger. Accounts receivable master file is reconciled to the general ledger on a monthly basis. To test the effectiveness of internal control, auditor will examine evidence that accounts receivable master file is reconciled to the general ledger and observe whether monthly statements are sent. In order to achieve audit objective, auditor will trace selected sales invoices from the sales journal to the account receivable master file and test for amount, date, and invoice number. And also use audit software to foot and cross-foot the sales journal and trace totals to the general ledger. The audit evidence related to the substantive tests are sales invoice, sales journal, accounts receivable master file, and monthly statement. After audit procedure has been carried out, there might be some possible misstatement occur, such as overstatement or understatement of sales.
Hi, my name is Nur Ain. I will present the next session. The next session is classification. All transactions have been recorded in the proper account. Audit objective is to check whether all sales transactions have been recorded in the proper accounts and correctly classified. For the classes of transaction and relevant account is first, sales, second, account receivables, third, cash discount taken, fourth, sales return and allowance, and the last one is bad debt expenses. For internal control is account classifications are internally verified. We have two audit procedure, which is test control and substantive test. For test control is to examine documents package for internal verifications, and for substantive test to examine duplicate sales invoice for proper account classification. Audit evidence is bank, reconciliations, pre-listing of cash, reconciliation of the documents, and cash receipt transaction. For possible misstatement, for classification is overstatement or understatement of allowance for uncollectible accounts and bad debt expenses. Next section is timing, all sales that have been recorded in the correct period. Audit objective is to check whether all sales are recorded in the correct period. For the classes of transactions and relevant account, first sales, second account receivable, third cash discount taken, fourth sales return and allowance, and the last one is bad debt expenses. For internal control, shipping documents are pre-numbered and accounted for weekly by the accountant. For timing, there is deficiencies, which is there is a lack of control to test for timely recording. Audit procedure for test control is account for a sequence of shipping documents, and for substantive tests, compare the recording of sales in sales journal with duplicate sales invoice and bill of lading. Audit evidence for timing is bank reconciliation, pre-listing of cash, reconciliation of the document, and cash receipt transaction. Possible misstatements for timing we have 5, which is first overstatement or understatement of sales and account receivable, overstatement or understatement of sales return and account receivable, overstatement or understatement of allowance for uncollectible accounts and bad debt expenses, uncollectible account receivable that have not been provided for, and the last one is misstatement in account receivable and related income statement accounts.
Okay, let's look at the next class of transaction, which is cash receipts. As usual, the first management exception is occurrence, where all recorded receipts for cash are actually received by the company. The audit objective is to identify whether the recorded receipts for cash are actually received by the company or not. The relevant accounts are cash sales, receipt of interest, collections on accounts from customers, dividend and investment from owners. For internal control, accountant independently reconciles bank account and totals of cash receipts are compared with computer summary reports. To check the internal control, auditor need to observe segregation of duties and observe independent reconciliation of bank balance. Next is substantive test. The auditor need to review cash receipt journal and master file for unusual transaction and amounts. Auditor also need to trace cash receipt journal entries to the bank statement and prepare a proof of cash receipts. There are 3 audit evidence that can be used, which are purchase order, receiving report, and customer invoice. Next, possible misstatements that can be happen is the company might not receive the cash receipts.
Okay, for the cash receipt of completeness, what is audit objective? Audit objective is to check whether all cash receipts are completely recorded, and for the class of transaction and relevant account, it includes cash sales, receipt of interest, dividends, bank book, and account receivable ledger. Okay, for the internal control, what does the company do to make sure that the cash receipt is recorded? First, the pre-listing of cash receipt is prepared. Second, the checks are restrictively endorsed. Third, batch total of cash receipt are compared with computer summary reports. And lastly, the statements are sent to customer each month. For the audit procedure, it divides by 2, which is test of controls and substantive test. For the audit procedure to the test of control, first is observe pre-listing of cash receipt, observe endorsement of incoming check, examine file of batch total for initial of data control clerk, and observe whether monthly statements are sent to the customers. For the substantive test, it obtains pre-listing of cash receipts and trace amount to the cash receipt journals, testing for names, amount, and dates. And lastly, it compares the pre-listing with the duplicate deposit slip. Okay, for the next is audit evidence. Audit evidence includes of purchase orders, receiving reports for the cash receipt, and customers' invoice. For the possible misstatement for the cash receipt of completeness is cash receipts are not recorded.
Accuracy in cash receipt is occur when cash receipt is recorded at the deposited and recorded at the amounts received. For our objective in accuracy is to check whether all cash receipt deposited and recorded at the amounts received. The class of transactions and relevant accounts consists of two, which are bank accounts and account receivables. Internal controls, there are three procedures, which are: the first one, accountant independently reconciles bank account; the second one, batch totals of cash receipts are compared with computer summary reports; and the last one, statements are sent to customers each month. Audit procedure consists of two, which are test of control and substantive test. Test of control have three steps. Firstly, observe whether accountant reconciles bank account, then examine file of batch totals for initials of data control clerk. Lastly, observe whether monthly statements are sent. For substantive tests, the first one obtain pre-listing of cash receipts and trace amounts to the cash receipt journals, testing for names, amounts, and dates. The second one, prepare proof of cash receipts. Inaccuracy assertion. Audit evidence consists of purchase order, receiving report, and customer's invoice. Lastly, possible misstatement that may be occur, which are: the first one is recorded the amount received from cash receipt are understated or overstated, and the second one, misstatement of amounts in cash receipt in the transaction.
As for posting and summarization for cash receipt transaction, the audit objective is to check whether all cash receipts are included in the account receivable master file and are correctly summarized. The relevant account involves are bank accounts and accounts receivable. The internal control is computer automatically post transaction to the accounts receivable master file and general ledger. Accounts receivable master file is reconciled to the general ledger on a monthly basis, and the company will send statement each month to the customers. To test the control, auditor will examine evidence that accounts receivable master file is reconciled to the general ledger and observe whether monthly statements are sent to customers. As for the substantive test, auditor will trace selected entries from cash receipt journal to the accounts receivable master file and test for dates and amounts, and trace selected credits from the accounts receivable master file to the cash receipt journal and test for dates and amounts as well. The auditor will also use audit software to foot and cross-foot the sales journal and trace totals to the general ledger. The audit evidence related to the substantive test is cash receipt journal, and the possible misstatement that might happen is overstatement or understatement of accounts receivable and misstatements in accounts receivable and related income statement accounts.
Next session is classification. Cash receipts transactions are properly classified and recorded in the correct amount. For audit objective, to check whether all transactions have been recorded in the correct accounts and correctly classified. Classes of transaction and relevant account: first, receipt of customers; second, dividends; third, rents; and fourth, investments by owners. For internal control, arrange the cash receipts transactions with correct classifications to avoid misstatements. And the next is cash receipts transactions are internally verified. The audit procedure for test control is trace cash receipts to cash receipt journal for proper classifications and review cash book for unusual items. For substantive tests, to examine documents supporting cash receipts journal or pre-listing for proper account classifications. For audit evidence, purchase order, receiving reports and customer's invoice. For possible misstatement, cash receipts are recorded in the wrong financial account statement. The last session is timing. Cash receipts are recorded at the correct period. The audit objective is to check whether the cash receipts are recorded in the correct period. For the classes of transactions and relevant account, first cash sales, second collections on accounts from customer, third receipt of interest, dividends and rents. Internal control procedures require recording of cash on a daily basis. Audit procedure for test control is examine evidence for daily deposit of cash receipts and review of bank reconciliation. For substantive test, compare date of deposit per bank statement to the dates in the cash receipt journal and pre-listing of cash receipts. The audit evidence is purchase order, receiving report and customer's invoice. Possible misstatement is cash receipts recorded in the wrong period. That's all from our group. Thank you.